Good morning, good afternoon. Today is Sunday, March 21st. Today we're going to do something a little bit different. Normally we have a Sunday stream at 5 p.m. Pacific Standard Time, so tune in next week if you guys want to be a part of that. But today we're going to just put out a video of the broad market analysis. We're also going to go over some charts that we found on Google. And then we're going to get into members' stocks that they want to see just after this. This is Patrick here trading with Prime. First thing I want to do is I want to go over to this put to call ratio, and let me pull it up so you guys can actually see it. So put to call ratio, what we see here is it's 51. Right now, the current level from the 19th was 51 puts for every 100 calls. The contrarian way of viewing this is that the lower that this gets means that more traders are buying calls than they are puts, and the higher that it goes means that more traders are buying puts than they are calls. And so the contrarian viewpoint is that the lower it goes, means that a turn is possible, or a turn could be just around the corner. And so we see this, the market is pulling off of this 0.4, actually got down into the 0.3 range. And what we see is that the market is pulling back a little bit here, meaning more traders are buying puts. And so if I go to a 3-year time frame, so this is the 1-year time frame. If I go back out to the 3-year time frame, you can really kind of see it. So we're down at the 0.51. As you can see here, this is the market bottom of 2020, which was back last year. Market bottom in here is 2018, the lows of the market back then. If I could flip this chart over to see the inverse of it. And as you can see in this range down here, where we had the market top of 2019 into the beginning of 20, and back here you had the market top of end of 2018, and then this of course was the bottom and into the Christmas of 18 going into the year 2019. And as you can see right now, the question comes up right now is if you are getting readings lower than the readings back in 20 and the readings back in 2018, when the median range is probably somewhere in this area, I'll just kind of do, what do I think around the middle? Let's just say 0.8. It's okay to be in this range. For this range right here is okay, but once you start getting below 0.6, that becomes a little bit questionable as far as are people getting a little bit ahead of themselves as far as how far they think this market's going to run. And of course, just like we get above 0.9, anywhere from 0.9 to 1.2, that's pretty extreme readings to the downside, meaning that there are a lot of traders buying puts that shouldn't be buying puts. They should be not buying calls or going long. So that's kind of the thing. One other thing to consider with the put to call ratio is that by itself, you can't predict a market top or a market bottom. It just gives us a little bit of evidence of what's going on in the market. So take a look at that. I'll try to post the link in the description. Here's the next thing I wanted to show you guys. I actually saw a tweet about this, and then I found the actual source. And I'm coming down here to the source. This is the FINRA margin debt and the S&P 500 real values. And so as you can see here, margin debt is getting pretty high up here. We saw the highs of the dot-com bubble, and then we see the highs of the margin debt of the financial crisis in 2008. And we, of course, see the highs of back here of 2018. And this is when we had a lot of repo action going on in the repo markets. And then as you can see here, the market kind of fell down here, March lows. And here we are, all-time highs on margin debt. That becomes a little bit scary as far as where are we on margin and how many traders and how many people are using margin. And this is the inverse to the, or it's inverted to the chart that we just looked at, just so you can kind of see where we're at. One thing that I noticed on this chart, and the article actually talks about this, is how you actually see the turn about 6 months before it actually happens. So when you start to see the margin debt where it's at, it actually comes about 6 months before the market top. So once we start to see this turn in margin debt creep off of here, maybe we will see the turn on the S&P 500. That's one thing to kind of watch out for. This is the margin debt and the S&P 500 real growth. I'm going to go over this one. There's one more I wanted to show you. Investor credit and the market. And this puts it in a little bit of perspective. So the green, what you see with the green is this is investors who have a positive credit balance. And then investors who have a negative credit balance, it turns to red. And as you can see, here's the red from the tech bubble. Here is the red from the 2007. And then here is the quote unquote Fed bubble. And here we are back here, and that was in 2014. Now this was May of 2018. And then that's when we kind of saw the risk off going into the Christmas of 2018 before we saw a bottom. And now here we are, all-time lows or highs, depending on how you look at it, as far as current levels. And where do we think that it's headed? Where do we think it's going? Just something to consider if you are going long on the broad market, just something to consider as far as risk on or risk off. And what I like to say is the market can stay wrong for a very long time. So we don't want to trade just based on that information. Now what I want to do is bring you guys back over to the charts. And where do we see the S&P 500 today? The daily chart looks really well. It looks really good. It's like, for me, in the bigger picture from even this last September till now, it's in a bull market. And we can just draw a trend going across, and however you want to draw the trend, I'm sure you could pick 3 points down here to create the trend. As far as from September, that might get a little bit iffy from the March lows because it was a little bit extreme there for a minute there. But as we can see here, we had this recent rally up here to the highs of 398.12. And what I had said in previous videos is if we got over a certain dollar amount, we're definitely going to 400. And it's more of a question of how much I believe in the $400 price target. And that's the thing. We have to take each chart day by day. We have to look at it and kind of react to what is the market really telling us. I'm going to zoom in on this a little bit before I go to the weekly time frames like we're going to do on all of these charts. I'm going to go just kind of zoom in here. Where do I see the S&P 500 going right now? Where do I see it headed? I'm going to zoom in one more time for you guys to really see it on the screen here. So we saw a low down here, and this was back on Thursday of 2 weeks ago. We saw the low down here. We saw a rally. It pulled back. It did the fake out, and then it rallied ever since, putting in a high of 398. That's what it did. We were all there. We all know what happened. The reason why you guys see 38.2% blacked out on here is because I don't take trades on the 38.2. Well, that's a maybe scenario. And the reason why you see the 23.6% Fibonacci retracement come up in fuchsia or red is because I never take trades on the 23.6% retracement. I wait for the 50%, 61.8% in the best scenarios, waiting for the 78.6, although sometimes you don't ever get that. I also rarely ever take trades on the 100%, which is why I didn't go long the Qs last week, is because the Qs did come all the way back down to 100% retracement, and I took the stop loss because I'm not willing to take that kind of a trade. And so here's the thing is that we could have gone long on Friday, but I'm not planning on taking the 38.2. Also, I didn't like the price action. It was pretty reasonable to seem that, we would find a low down here. It was also at the 200 hourly moving average. We would find a low down here. We put in reversal. And if I put it on another chart, you'd actually see the reversal candle. And here it is. Here's the 2-hour chart. Now you actually see a reversal candle that traders can trade against, which means that you can be long Friday's low. So let's say tomorrow we come into the day, let's say we gap down or gap higher. As long as price stays above Friday's low, the market is good. If it starts trading down here towards Friday's low and consolidates, I would not be long the market. I would expect that there would be further downside prices, but it's okay to run a test again. It's just I'm not sure if I would want to go long. The highest probability, lowest risk trade is wait for the market to consolidate or put in higher lows and higher highs, and then take it once it gets over 392.03, and that number isn't an actual. Let's say we could take it as long as it stays above 3. I can't even see the number. 390. Over 390, or better yet, wait for it to get over 394. We could begin targeting 400, or rather the highs of 398.12. Now let's go to the weekly time frame, and let me remove this drawing. Weekly time frame, it looks like the market consolidated here, 2018 into 2020, broke out, and then it back tested twice and has taken off. It would be reasonable to assume that the market at some point could come back down here and find another back test before taking off again. I don't think that the market's going to get much lower below this level. So if you are long the broad market, 1 year out, 2 years out, 3 years out, higher prices than they are today, I believe. But how much pain do you want to endure? Because we could see that pullback, and that would be S&P down 17%. Not that I think that will happen. I think it's less likely that will happen. But do I think we'll come back down here and back test 370? Probably. Higher likelihood. 359, I don't know. It's possible. I don't think so. But I think it'd be reasonable to assume that 366 to 370 if you're waiting to go long as far as your long-term trades. Let's go to the Qs. Bigger picture, and we're just looking at the bigger picture here. The Q is bigger picture. It looks like a bearish consolidation. So all the names that we love, everything from Amazon, Facebook, Apple, Microsoft, Google, Tesla, all the names that we love, I think that we can see a little bit further downside. It looks like this is a flag pattern. And until prices get over Friday's high, or whatever this week's high was of 324.14, that this downside bear flag is going to play out unless it gets above 320. What did I say? 324.50. If it gets above that, I think we'll see possible all-time highs again. It has a lot of work to do. This chart has a lot of work to get up and going again. I think it'd be reasonable to assume, because the Qs were up so much, they were up 104% within a year. I think it'd be reasonable to see another pullback, maybe down to 283. 286 within the next few months, but anything is possible, and that downside projection is off the table if the Qs get above this last week's high. Let's go to the IWM. IWM, we saw a lot more movement, and we've been kind of talking about this on and off, and this is what I'm going to say is I do think it's reasonable to assume, like the other charts, definitely reasonable to assume that you might see a pullback down to this downside. And I'm not even going to call this a projection, because I don't know if it's going to happen, and I don't even know what the likelihood would be. There's a lot of room in here for it to do a lot of things. Right now, what I see for a lot of the names in the Russell 2000 is I see bullish consolidation as long as we stay above 217.83. That's his price area here. That's not this last week, but the week before. That's the low of that week. You saw a bullish move out of here, bullish reversal candle, consolidation, and then an up move. Now we're consolidating sideways. So as long as price can consolidate sideways, then it's going to stay in a bullish fashion. What we haven't seen yet is we haven't seen a rejection. We haven't seen a weekly rejection or a weekly reversal candle. And like I said, if the IWM stays above 218.16, we have to trade it bullish until that doesn't work anymore. Let's go to the XLF financials. Financials, same thing. We're consolidating in a bullish fashion, meaning that we have had this monster move up here. And by the way, you could possibly see a pullback. If all the markets pull back, it would be reasonable to assume that the XLF will pull back to at least $32, maybe even $30. But for now, right now, this very minute, it has had a monster run up. It needs time to consolidate or a pullback in price. One or the other would work. Do I want to take a trade in here? Not me personally. I'd be looking for more of a pullback, maybe down to this 32 price area before going long. And by the way, some of you guys have sent me financial stocks. And so before I was to go long in financials and any stocks in the financials, I would want to see a pullback in either time or in price. So that's something to watch out for. Let's go to do we want to look at the transports? Transports weekly reversal candle, right? But we've had a lot of those on this run up. We've had a few of those on this run up. We are getting pretty high up here. It doesn't mean that we have to completely retrace or come back down here or pull back to the highs of 13,000, although I think it's likely that we will. I think that as long as price stays above 13,693, I think that it'll remain bullish. This could just be a little bit of a consolidation this past week, so we will see what happens in the transports. Let's look at TLT. Bond market, we see a pullback, we see a sell-off coming back in here. The thing with this chart is that I've time and time again have thought that there was going to be reversal in here, and this was the last week reversal, and you can't really see it. Let's do there. Can you guys see that better? Okay, so you do see a reversal candle here. That's this one. About a month ago, we saw this reversal candle, and we said if price stays above that, the low of that candle, that it can be bullish. I was looking for a bounce up here before doing something else, but that's not what happened. After this reversal candle on heavy volume, you saw a steady stream of selling coming into play, and we've still not closed back above that price area. I think a dead cat bounce is likely. And as far as what I think the broad market will do, Normally, I would say the broad market is more likely if the TLT bottoms and starts to rally, that more likely the broad market, meaning the SPY and the Qs, would most likely sell off. The difference here is that we see a divergence with the TLT and the SPY, meaning they're kind of trading together. And the reason why is because of the yields. And as long as the yields continue to rally, I think the market might slowly diverge from that, but I think also at the same time we're looking for that disconnect, and right now we just haven't been getting it the last few weeks. I might put out a video. Let me know in the comment section if you guys would like me to put out a video regarding the bond market TLT and how correlated with the SPY that is. It's also a good idea to look at the banks. I think that's why the banks have been rallying as much as they have. They like high yields. The broad market might like high yields, but not all at once. It's too fast, too soon kind of a thing. It has to do with inflation and current values of assets. And so we can get into that maybe in another video. But I think it's likely that the TLT sees a bounce somewhere in here. I don't want to begin giving price targets on TLT yet, but I think we could easily see a bounce in here, a dead cat bounce in the bond market. We will see this next week. I'm not too convinced on this being a bottom. I would like to bottom pick this, but at this point, I think that we just should let TLT consolidate or give us some sort of signs of life before going long. Okay, now let's get into the charts. I've got a list of about 20 or 15 names we're going to look at that members sent me. After the video, I will put the timestamps underneath the video so you guys can easily just skip past all the boring stuff and get straight into the charts. First of all, CLVS. We talked about this on stream last week. Or it was the week, I think it was last week. 38% was the short interest at the time. And so what we saw is we saw a run up in here. This put in 47% on Friday. And so now that we have this breakout, maybe this 38% of people, or 38% of the flow, maybe we're going to see some sort of short squeeze in here. We may have already begun seeing that. One thing I'll urge you guys is every time we see this run up, we see a sell off, run up, sell off. This is one thing to kind of keep in mind or keep an eye on is this run up and then sell off. And so let's do this. Let's pull the chart like this so you guys can kind of see it a little bit better. So we see this price action, right, where it's kind of, it's definitely a breakout. We see a breakout above this price area like this. And so I think it'd be reasonable to expect that it would pull back just a little bit. The problem with trading this on the hourly time frame is these are pretty big candles in here. So if you're trying to scalp this or day trade this, now you see the breakout, it's consolidating. What do we say? If it consolidates in time versus consolidation in price, it's more bullish. So because it's staying above this area of 750, I think we could see a little bit of profit taking and possibly a run up out of here again. But then again, I'm not trying to go long if the price gets back below 723 without coming back down here to gap support around 635. BLNK. BLNK, this is the daily chart, same thing. We had seen 36% short interest, and so now I'm zooming in here, and this kind of looks like the broad market. We see this run up, it's been pulled back, it found a bottom, and now it's creating a bull flag on the daily chart. So we're looking for a breakout above that price, and what I'm going to do is just put a line in here, and it just has to be one of those conceptual things, not an exact figure or price, but we're looking for a breakout back test on maybe a 15-minute time frame, and then a resumption out of there would be a good long entry. I would wait for the actual higher low, as far as here's the low. Now it ran up, and now we're looking for a higher low. Is it going to be down here, or is it going to be up? Is it going to be right here? Like, we don't know where it's at yet. So I'm looking for a higher low. What day is that going to be on? You could definitely go long, as long as you knew where your stop loss was going to go as far as taking it out of that consolidation. FDX, we saw earnings coming out the other day. I like this chart. I like what it did. It ran through this price area. It pulled back. We saw some behavior, some movement. One thing about these trades is you have to be a little bit convicted or have some conviction in it. Had a run up. It consolidated. It broke out and was back testing. This back test day, I know it's hard at the time. I know it's really hard to take these trades at the time. This was a pretty bearish close. This, I think that was on Tuesday or Wednesday, Tuesday, I believe. Pretty bearish close. The broad market wasn't doing well. It's hard to go long on a trade like that because you don't know if this is going to be a failed breakout, meaning it broke out about above this consolidation and then broke back down. The thing is, you have to have a little bit of conviction in knowing that you have to have, you have to believe in this last pop up out of this buying. We see this in Tesla all the time where it'll break out, it'll pull back, and on the pullback we never really buy it. We don't buy that dip after the breakout. And sometimes we really should. We should be buying that dip after the breakout because you know where you're wrong. You know if it falls back down into consolidation, you know that you're wrong. Well, in this case, that's what happened is we could have bought it back down here in the pullback. It broke up out of here. By the way, I'm going to go over to this snapshot. Shout out to the Discord. If you guys want to be members and you're not part of the Discord, go underneath the link of the Discord is in this video. Go down to the link or go to rtbtrading.com and you can get you can get access there. Something like this, maybe this would be useful for you guys. On 315, I posted this breakout, the back test, also from Sunday stream, coming into a back test on the daily chart. Resume off support can be a good entry for a swing trade. So I'm not saying that it works out like this every time, and who wants to go long right before earnings, but this is just a good example of that. Where is FedEx heading right now? Well, we do know a lot of times FedEx gaps higher. We either see consolidation, which I'll highlight down here. We see consolidation, or a lot of times we'll see the gap higher on the daily chart, and then it just runs up with no top in sight. Other than when it's really extended and then it gaps higher, then we'll see the pullback, right? Well, right here, we had enough time in between the low over here, this consolidation period here. It's not really extended, right? Like it's not really extended. It can continue printing higher and higher prices up here. It can continue eyeing these areas up here, maybe around 300. And what would I see for some sort of reversal type situation is I see a high in here, a left shoulder, a right shoulder. Maybe this is coming up here to create another right shoulder. Time will tell. It is possible this could be a reversal candle, but I don't think so. I think this is probably going to have a continuation move out of this. Looking down on the lower time frame, this is the hourly chart. You can kind of see the earnings run up on it now. And now a lot of the price action is a little bit more clear. You can really see this breaking out of consolidation, pullback, out of consolidation, back test, and then it takes off the next day. Now, maybe we'd want to see a little bit of consolidation out of here. Maybe it'll consolidate and it'll start printing more prices. What I don't want to see is a fade, and you'll know it's a fade because price will get below 275.63. That's a pretty big gap fill. So I would not want to be long, getting caught in a long trade when price is closing below 275.70, somewhere in there. NVAX. NVAX, we do like this as far as I think that it's likely that we see rotation to biotech. I thought there would be a little bit more rotation to the Qs. But as far as NVAX goes, we do see this run up off of the back test, but it's already ran 51%. It doesn't mean it can't put in higher and higher prices. I think it needs a little bit more time, although we're getting up into an area where, well, two things that I see. One, we see the sell-off below support, right? And then it recovered and then rallied back above support. That's more bullish than it is bearish because it should have continued falling down and didn't. The other thing is we're extended from this price up to this price. So I think a little bit of sideways behavior is likely, although we could get above this resistance, which is around 235. We could get above that resistance and continue printing higher prices. I just don't know if I'd want to go long at this point. Let's go down to the hourly time frame. I do like now a little bit better in the hourly, so maybe we'll trade this lower time frame. Right now, if I can see prices above 230.89, I would be willing to go long, which, to be honest, it could be a gap higher in the morning scenario. But for now, maybe above 233.17 I'd be willing to take a long trade out of this, although I'd prefer 1 or 2 more days of sideways action before I would make that trade available. So we'll take a look at it soon. TTD trade desk. I do like this overall run up, although we are getting up here. We had a 540% since the March lows, and then we have had a pullback of about 40%, which is ideally a good place to go long on a 40 to 60% pullback. I don't like this bearish consolidation these last couple days. And what do I mean by bearish consolidation? There's actually two patterns in one. One pattern is you have a low. It was a back test and we've rallied. Now we're looking for a higher low on the daily time frame. I don't think this is it. And if prices get above 750, I think that we could call this a higher low. But for now, if prices continue to consolidate in here, all this is a bear flag on the daily chart, meaning lower prices would be more likely, maybe another back test, and that would give us the higher low from the low back here. Where would I go long? Above 750. Above 750, I'd be willing to take a long trade because I know the price that I would be wrong. The price that I would be wrong at that point is 700, although that's pretty far away from current price. Workhorse, I would stay away. We may or may not love this company. It's a $1.50 company. Have they had $1.50? Let's do this. $1.50 to $42, which is roughly 2,636% on the year. Did Workhorse have 2,636% upside in revenue? I don't know. So what that tells me is that this entire thing is most likely speculative as far as how many orders they will have coming in. Although I say that maybe they have had earnings popping in here. Maybe they have had good earnings. Maybe they have had orders flowing into the company. Maybe they've had more purchases. That's possible. But I would think that a lot of this is speculative, just like we see in a lot of the other EV markets. So I say that, not saying that I know that prices will go down, just to urge you caution as far as where we're buying in at. What I see technically with this is that it's a giant bear flag, meaning here's the down move. Here is the bearish consolidation, and we could see further downside prices. This was just such a hefty move. It needed time to consolidate before further prices to the downside. Now, where do we know that that analysis is not right? That analysis is not right, and this is what's cool about technical analysis. If price gets above 1853, we could then be targeting the upside projections, $28. So it's much more likely to, or as far as a high probability lowest risk trade, is wait for that breakout above that price, then go long, right? Instead of going long at support or current prices, just simply set your alert for $19.20, or set your alert for $19. If we can close the day above $19, I think we can begin targeting these upside prices. That's what I would be looking for, technically speaking. And then downside, where would we know we would be wrong is if we took a long trade out of this price area and it fell back down through the price area, we would then be stopped out of the trade because it'd be back down into consolidation. I hope that makes sense. Okay, so target TGT. I like TGT. I think the reasoning behind this trade, well, there's two things I see. One is I see this, which the trader who sent this to me he pointed this out. I do like that pattern. I do see the pattern as far as a possible short trade. However, the one thing that I would urge anyone in this is knowing that price broke down out of this consolidation. What do we say about that? Price should have continued selling off, but it didn't. Because it didn't, and it came back up into consolidation, that makes it more bullish than it is bearish. We see this with Boeing all the time. We see Boeing break down and then recover and then rally up higher. And when that happens, and then it takes off. So what I would say about Target is the same kind of idea, that I'm not saying necessarily you can't go short. You could, technically speaking, be short against this price area right here, and I'll give you the figure. It's short against 193.70, right? The high of this breakdown candle, this one here, just follow my cursor. The high of this candle is 193.58, meaning you could go short, right, or anywhere between current price and the high of that candle. In the minute that the daily chart, the day closed above that price area, you'd be stopped out of the trade immediately. Two of those scenarios, I'm just saying, if you are going to take a short trade, be mindful and wary of this bullish action we saw in the last 2 days. Be mindful of the bullish action we saw coming out of a sell-off, back up into the price range, back above all the moving averages. Take a look at both of those. I'd be interested in this trade if I began to see if I saw a reversal candle in the daily chart. I'd be interested in taking a short trade. CRWD, who doesn't love it? Two things. Well, one thing I don't like about CrowdStrike is I don't like the lingering down here below the moving averages. I don't like that. I don't like Thursday's candle bearish, and I don't like the consolidation on Friday as far as more bearish. But what we could say positives about this is that we could say that look where price is, right? Let me zoom out here for you guys. Let's go to the weekly time frame. Okay, well, I take that back. The weekly is looking pretty ugly up 3 weeks ago, bearish. And then now, since then, you've had bearish consolidation, probably following the cues. So as long as price consolidates here, it's more likely that we fall down to this area down here around 160. However, The daily was telling me something different. The price, like I was saying before, is lingering up here. After these monster run-ups, price is lingering. It already came down to back test. So what I'll say for something like CrowdStrike is price really needs to get going here. We're right now we are scouting a higher low. So maybe that was Friday. Maybe that's going to come into Monday. Maybe we'll see some price action like this Monday, and then it'll start taking off. If we can get price back above 200, we could almost call this a higher low as opposed to the low down here. And that's what we're kind of looking for to go long. I don't like that we're trapped below the 2 of the moving averages, and I don't like what looks like bearish consolidation overall. Those two things I don't like. CNDL. CNDL, there's nothing wrong with this. We are consolidating. This was a pretty monster move up here. $1.13 for whatever reason we have this as a price on the chart. So I don't know where that came from, but anyway. So maybe we were looking for this was selling off when we're looking to be a buyer down here. I can't remember. So right now I see more consolidation on the daily time frame. I do see more volatility picking up, but that's okay. Price is still staying up in this area above 149. Or maybe that was the close on. Yeah, 149 was the close. It's above all 3 moving averages. It's bullish. I think if we can start seeing a price move out of here, we can begin targeting $2. Maybe even the gap fill up here around 220. Those things I'd be looking for. You could go long out of this price area, meaning it is a good area to go long. You know that you'd be wrong if price gets below 134. So you're pretty close as far as risk versus reward. But you know, maybe targeting 166. There could be a trade developing in here. Let's go to lower time frame. Lower time frame, I'm starting to see it a little bit, right? But this is how we can make it a high probability trade is we could just do this and then wait for the actual breakout. And the reason why is you could then begin targeting the $2 price area. And you can see why I think that there might be some resistance at $2. I would look for the breakout. I'm looking for the breakout above 164. Maybe a back test on a 15 and 4 to get going. One thing's for sure, though, it's looking like it's creating higher highs, higher lows. It's just consolidating in a bullish fashion right now. Well done on looking for that one. PLTR. You know what? I think I'm going to keep maybe keeping this PLTR on the chart. I do like this bullish action. I like how it ran up to $45. It did pull back. It back tested once, back tested twice. And what back test am I talking about? Let's go back to the daily chart. Here is the back test. Even though I don't like this kind of downside back testing, I don't like that. I would prefer back test to come horizontal, not at a down angle. But that's the back test I'm talking about. It hit it once, hit it a few times. You know what? Let's not even call it a back test. Let's call it a trend. Okay, I would prefer it to be more horizontal. Looking at the hourly time frame, though, I do like the bullish action as far as from the low down here. I believe it was 2 Fridays ago, and then it's now creating or trying to create a higher low based on that price back here. We see 1 higher low, 2 higher low. Now maybe this is a 3 higher low. So that's what I'm looking for. I'm looking for a higher low. There's no reason why price should be back to Friday's low. This almost makes a good risk versus reward because price really should not close below Friday's low. If it does, I don't think it's going to stop at 22. I think it's going to come all the way down to $20. So that would be a pretty good risk versus reward. We could begin targeting $26 if we can create a higher low from Friday. Put that trade set up on your watch list. AMD, I don't like the bearish consolidation Friday. In fact, Thursday and Friday, we're looking at bearish consolidation again, following the cues. We see a low down here. We see a potential higher low. Higher high. And then what we see forming, we're scouting a higher low, and that could have been Friday, and that would have been a good retracement, possibly if maybe 50% or a little bit above 50%, maybe 61%. We're looking for a pullback. This might be the pullback from Friday, although I'm not too convinced. I don't like the look of Thursday's candle at all. What it looks to me in the chart is beginning to roll over. And I know a lot of you guys who've been following me, you know I'm saying a $100 price target on AMD. That's once we break out. Once we can get going here, I believe that $100 would be on the table. Until we break out and get going here, I think we have to stop looking at that $100 price target. We need price to stay above this area right here, and that area is around 76.44. I do not see a trade developing. I don't like how it's resting on the 200-period moving average. I like AMD as a company. I just don't like this setup as far as the technicals go. GM. That's what I meant to pull up for you guys is the EV charts. I think GM came out and talked about all EV all electronic or not emission based vehicles by 2035. Probably why we see Tesla and a lot of the other EV companies. You saw a lot of the market share go to these companies like Tesla and NIO and all the companies that we like, the meme companies. We see these companies coming out and rolling out. Workhorse. A lot of the money went to these companies because a lot of the other companies weren't really well known, or there wasn't a lot of news about the major car companies coming out with their own line of vehicles. I think it's higher likelihood we see more money coming out of Tesla and NIO and Workhorse and all the names that we like to trade. I think it's more likely the money will come out of those companies and go back into the broader, well-known car manufacturing companies like Toyota, GM, all the companies. So do I think this is a high? I think it could be a potential high for now. I think we'll see a pullback in here down to 56.79. As far as long-term speaking, I think you could buy at any point, and the reason why is I don't think this run is over. 62.24, we are pretty extended from the March lows. We're up 336%. Again, probably a lot of it on EV related. So be mindful where you're buying this at. But I think all-time highs could be likely at some point of $94. But I think we're a ways away from that. And I think we want to see a pullback, kind of like you see on the monthly chart. Here's the run up. Doesn't it kind of look like this run up? And let's look for a pullback. I'm not saying the pullback will be that in depth, but I would say that probably these highs would be a good area to go long. If that doesn't happen and we don't see a pullback down to those highs, that's fine. We don't have to take the trade, right? We'll just look for another trade. But that's on the monthly chart. Let's go to the weekly. Weekly getting a little bit extended. We do see a weekly reversal candle, or a potential weekly reversal candle. But honestly, price has to stay above 53.72. Price has to stay above the low of this candle, and it can stay bullish, right? It doesn't have to be bearish. I don't think it's just going to roll over. I think any downside we see in GM is probably just going to be profit taking. EFX. EFX on the daily time frame, bullish action as far as this past run up. You see this bullish action, it broke out, and now we are consolidating. And I know people might shun away from this bullish consolidation, but even though that's what it is, because of the type of pullback. What was this, a 17%? So now what do I see? I see higher low developing on the daily chart. As far as, here is your run up, this is the pullback. And if I drew a couple trends in here, one like this and one like this, what does it look like? It's going to look like it put in a low, a higher low, it rallied up into resistance, pull back, it is consolidating. Normally what we'd see is another move out of here to the upside. I like this chart, so thank you. I don't remember who sent it to me, but I'm looking for a long over 175.55. If price can get above that, I'd be looking to take this to the long side, targeting 181 with the stop loss just below 170.22. APHA. Again, I like APHA. I like the marijuana stocks and sector. I think this needs more time. We saw a low back here, especially from the run up to $32. I believe we're pushing into 2018 prices. Let's go back here. Well above 2018 prices. And you can see on the weekly time frame that this old high over here of 1981 did act as weekly reversal or weekly resistance. And as you can see, price shot way above that. And if you were confident in that short trade, although you probably would have been stopped out, if you were confident on the weekly time frame, it would have been a lot of pain for a minute there. And then it came back down to a low of 1403, and now it's consolidating. When I see this kind of consolidation, even though there's a weekly reversal candle, this is the weekly reversal candle, even though I see that consolidation after that weekly reversal candle, I believe that this type of action is more bullish. I think that this candle is just like, hey, the market said, you know what, that's too high of prices too soon. Let's profit take. Now it's consolidating. So on a weekly time frame, if you are a long, I think you can be long over this previous consolidation. Although I would expect at some point a back test of that. I don't think that back test is going to be anytime soon. And I'm not sure that back test will even get all the way down there. I think as long as price can stay above 1515, is a solid support. Below 1515, you have a support of 1229. Bullish until it gets below those two. Tesla, like I was saying before, I think we can see some money being pulled out of Tesla. The weekly time frame, it looks like it's setting up for more possible weekly downside as far as a large bearish bear flag. However, let me go to the daily chart for those of you who are canceling this subscription because you're a Tesla bull. However, on the daily time frame, I see what could possibly be setting up for higher prices. You see a low down here. You have a reversal candle in here. It could, in theory, and hey, look, here's a head and shoulders. It could, in theory, have another run up here. But I do believe that the highs are in. I think 900 is the highs. I think we'll have a run up maybe to 762. It'll roll over. And before you turn off the video, one thing I want to say is I believe overall, over the long term, over the next, let's say 3 years, I think we could see higher prices. However, we need a little bit more consolidation. And on a chart like Tesla with a volatility like it is, we need a lot more time. So here's the weekly chart. If I just kind of zoom in like this, right? And I've kind of been saying this as far as, I don't know where we put a trend in here. I saw a chart with a channel on it. I'm trying to duplicate that. Let's see if we can. Oh, I've got it on log. I don't know. Okay. Anyway, so I think we can see higher prices in here, probably more prices up here to 1,600, 1,400, maybe even 2,000. But I believe that this is too soon, too fast. I mean, you had a run up of 1,000% and unsure of what the company has generated as far as valuation or not valuation, but revenue. Actually looking at the books, but I believe that we could see a pullback to 443 on a weekly time frame. But then I do expect higher prices. I do. So I'm basically think of it like this. Short term on the daily chart, I think we're going to get to 762. Long term, which is medium term, on the weekly chart within the next few months, I think we'll see a turnaround and lower prices, maybe something like this, setting up for closer to 400. And then I think that we will see higher prices. So if you're a long-term investor in Tesla, don't sell. If you are a medium-term investor in Tesla, I believe lower prices. And if you're a short-term and you want to swing trade this, I believe 762 could be a good area to swing it to. XLE. XLE, we do see a little bit of rotation in here. We see some hefty resistance coming in. I think that the reason why, and I don't know if you guys can see those yellow lines on there, but I was trading this before. So resistance, right? It was a previous low on the weekly time frame. It rallied away from this area. It was support, created what looked like a falling wedge, or what a lot of people thought was a falling wedge, but actually turned bearish, which is why it sold off. And of course, that was, I don't know, maybe that was the pandemic. Let's do this. I believe that was the coronavirus. And now I can't see. Yeah. So coronavirus low, it rallied up in here, pulled back, and now we're rallying again. I think it just needs a little bit more time, so maybe we'll see a pullback in here. Let me go to the daily chart. Yeah, I mean, it's just a little bit of profit taking. Now we're looking at the daily chart. I see a high up here. We could call this a reversal candle, but I don't think it has to last for very long. Bearish consolidation as far as Friday goes. Maybe we'll see some lower prices of $46.67, maybe even $45. Either way you look at it, I think both of those areas are a good area to pick up long term. And as far as lower than that, I would want to wait to see a breakout above 51.63 before I went long. Apple bearish consolidation, same thing as the chart we just looked at, and this of course is going to follow the cues. And so just like Tesla, Apple has ran up pretty high. I am a huge Apple fan, although I believe that Apple could still see a little bit more downside, maybe 114, maybe even lower than that. Let's go to the weekly time frame. Weekly time frame, just like Tesla's chart, you see how we could possibly see a pullback in here. So before the coronavirus, Apple was trading at, and I know there was a split in here, but let's just say before the coronavirus highs, Apple was trading at $81. And then we had the coronavirus that sold off to $52. And so since then, we've had a run up of a high of 174%. So I think it just needs a little bit more time. We could possibly see this pull back to, and I'm going to throw this on here. I don't know if it's going to happen. It's possible for the next 10 years that Apple does this. I don't think it's likely, but it's possible. I think in the next, I mean, just looking at the weekly time frame, let me zoom in one more time so you guys can actually see this. This is bearish consolidation on the weekly. You have down move. It's creating some sort of whatever. The pattern is bearish as far as the weekly time frame goes. If this breaks to the downside, I think we begin targeting this price, which is around $100. I think that Apple will probably stay between 93 and well above 100. If it starts getting down here below 107, I think that it's buyable as far as for your long-term accounts. In fact, any point in time is buyable for your long-term accounts. But as far as this week, coming into this week, this is looking really bearish to me, not bullish. Even on the daily chart is looking bearish to me. Let's go to the hourly chart. Hourly chart is looking bearish. However, there's one thing I do notice. I do notice this back test. And you could say it was around here. It was a back test of an old breakout. And so now we're looking for a higher low, which we thought was last week. So Tuesday or Monday of last week. So right here, Friday, is this a higher low? It can be. If we gap higher in the morning and get going here. But if you're looking for a trade setup, it's over 126.38. Long over 126.38. AMC. A few more charts and then we're out of here. AMC. Huge run up, massive. I don't know if this is, I don't know any of the news. Maybe it's the reopenings, but you have this $20.36. I think we became involved in AMC around $11. That's not $11. I think we were involved in it around $11. Where was it? Let's go. Was it AMC? No, I'm sorry. It was like $4. 450, somewhere in there. Anyway, it's not the point. Okay, so higher highs, higher lows. It's bullish. It's above all the 3 moving averages. Would I want to go long? I would not personally, because of how far it's run in such a short amount of time. But it's possible to be long if you already are above 1205. You can stay long, and so that's this area right here. As far as the last pivot, here's another pivot down here. Above these price areas, you can be long. I would want to see more consolidation, and then if we did something like that and then we broke out, then I would want to target that to the long side, because you have targets up here. You could easily target $20.36. Now, I say that, but I would also say this. The more that this kind of squeezes up here, pretty soon we might see that parabolic squeeze like we did last time. As it begins to squeeze up here, we might see that run up out of here. So if you're in the trade, stay in the trade. No reason that I see to close it out. Let's look at Citi. Ticker symbol C. We saw a recent pullback on Friday, back test of the recent breakout. A lot of volatility. I also see a reversal candle on the daily chart. This is going to be following the yields. I think has a lot to do with it, so pay attention to the yields, which is TNX or TYX. I think this would probably follow TNX more than it would TYX, although it's possible. So this is the 10-year treasury, and so you can kind of see this run up. The more that this runs up, the more likely it is that C and all the banks run up. So that's something to just kind of watch that. It is consolidating on the weekly or on the daily time frame. If I do this, there you go. So we see this run up, and you see this, it's running up out of here, and now it's consolidating. And the more it consolidates, the more likely it is to have higher prices, but I think it needs a little bit more time. This isn't the kind of trade setup that I like personally, but if you're in this trade, there's no reason to get out of it unless you see price close below $71. JCI. A little bit of volatility picking up here. Same thing, it's consolidating. We could see a pullback in here. I think a viable pullback. I don't want to give downside pullback targets or projections, or no matter how you look at this, it's bullish. As far as the daily chart, let me go to the weekly time frame. Weekly time frame, we are definitely getting extended here, 161% compared to the normal range. Here's the normal range. This might have been a normal range, and so we're breaking out of here. At what point is this? I mean, this has kind of been going straight up since the March lows. So that's something to just be wary of, be mindful of. But that's the weekly time frame. We're consolidating on the weekly time frame at a sideways action, which is definitely okay. Maybe we just are burning off a little bit of energy. This isn't my kind of trade setup. I prefer down here, one of the last times going long, although that's what we like to do in bull markets, is buy the dip. And so any point here, we could buy the dip and target higher prices. Just be careful of how much money you're spending looking for that next move up there. NKE. NKE looks like it wants to have a little bit more downside areas it wants to get to. And so it could turn around at any point. I also wouldn't, that doesn't mean that I would short. It just means that I would expect further downside prices, maybe 130. There's some gaps in here that we could fill on the daily time frame. If I zoom in just like this, you can kind of see it now. You have a lot of volatility picking up here. I think 138 would be ideal. As far as this being resistance overhead at 145.90, somewhere in there. But this is definitely not bullish as far as Friday goes. Probably some bad news, some bad earnings. I would expect lower prices. Let me go to the intraday time frame. And by the way, when you guys see sell-offs like this, I usually prefer to wait for at least the third day of trading. The 3-day rule, look that up in Google. I prefer the third day in trading to start looking for a reversal. It needs more time from a massive sell-offs. From the fear, it needs more time. And here you can see it, day 1, day 2, day 3, you had the reversal, right? And I'm not saying it works every time, but day 1, day 2, I'm looking for the reversal candle now. Doesn't mean you'll get it. It could fall right through support, but that's what I'd be looking for. And this is why we want to give it time. By the way, if you're an options trader, that's another reason why you want to give it time. Bear flag on the hourly time frame. Here you see the down move, bearish consolidation, bear flag most likely wanting to play out down here to this price area of, I would say roughly 129 to 132 would be an okay level. Yeah, we could do that. We could say 132. Right? Start looking for a reversal candle around 132. Maybe we'll get a dead cat bounce out of there, but I would just be very careful. V, same kind of scenario. If I go onto the daily chart, this is Visa, the most extreme bearish close I have seen in this name for a long time. It's highly likely that we're headed to 200. But you'll see a little bit of support around 203, a little bit of support around 200.53. Again, just like the other chart I was saying, we want to wait for let it cool off, let the days develop. It might fake us out. It might rally up here to 212, but then it'll sell off some more. So you might see a candle that looks like this. If I zoom in a little bit, you might see some sort of candle that comes up like this and then comes back down here and sells off again, just like this, creating more selling pressure. You might see something like that. In fact, if price did for any reason rally tomorrow up to this area, I would be looking for a short trade with a candle looking like this on the daily. Now, at what point would this change? If price gets above 219.64, the long trades are off the table. Price needs to get above that area before I would take a long trade, until time developed in here and it developed something like this and then created higher lows from the sell-off, if that makes sense. Hope this helped you guys. Feel free to tune in next Sunday, 5 p.m. Pacific Standard Time. Like this video if you gain value out of it. Subscribe, bell notifications, so when we do go live, you won't miss a thing. The link to the Discord is in the description of the video. We will see you guys next time.